Dividend or not, deal or no deal, credit rating downgrades, what's going on? As worries surrounding the dividend amount, I state a case for why it's beneficial for it to be temporarily eliminated, and how the transactions recently announced play a role in the recovery plan of the stock, MPW. It's first important to realise that the main issue of MPT is the upcoming debt maturities, which has subsequently led to credit rating downgrades from S&P Global and Moody's, in part due to liquidity concerns, and I think it is critically important for the management team to tackle this problem before almost anything else. This is why I believe the $90 million which would otherwise be used to pay a dividend would be much better spent buying back the discounted debt on the open market. Of course, the same logic applies to any cash received from asset sales, and it seems management agree. With this in mind, we can now discuss the most recent update from management. For some background, in the latest earnings call, the CFO says regarding the Prime deal, as we realise capital from these transactions, we expect to immediately reduce our debt maturities. In 2024, we have only two maturing loans, approximately $300 million in May and $130 million in December. As expected and confirmed in the recent press release, MPT has received $250 million in cash, which can immediately go towards these previously disclosed efforts, particularly the bond due in May. In addition, they have received an interest-bearing mortgage note for the remaining $100 million, which is due in 9 months. The particulars of the deal are as follows. Assets transferred to Prime in this transaction were the St. Francis Medical Center in Linwood, California, which appears to be the only high-quality asset of MPT's relating to Prime, which with an impressive glass exterior looks far more modern than the others. Alongside these are the 4 hospitals within the St. Clair system in New Jersey being transferred to Prime. Although they aesthetically appear to be a mix of relatively lower quality facilities, as the saying goes, looks may be deceiving. I'd like to note, I could not figure out what hospital was the 4th in the St. Clair system, as the aforementioned deal involves 5 properties, leaving 4 remaining hospitals being leased to Prime by MPT, which should make 9 items, but taking a look at the property list available on the Investors Relations website, there only appears to be 8 properties relating to Prime. Prime Healthcare's website also only shows 3 hospitals with the St. Clair's name. In any case, they go on to say the remaining properties with Prime, which again appear to be a mixture of lower to average quality facilities, but this time without any clear standout like the Linwood Hospital. In this mix of 3 hospitals split between Michigan and Missouri, combined with the only remaining New Jersey facility having now been placed under a new 20-year master lease with the usual rent escalators attached. Another key consideration, as management point out, is the cap rate of this transaction, which at 7.4% is near the most recent quarter's median for the healthcare sector, which according to S&P Global is at 7.6%. This transaction is another data point to support the value of the assets as shown on the balance sheet, especially if you consider the overall quality of the hospital sold. Here's what Moody's had to say. We view the REIT's assets quality as moderate, with adequate EBITDA property coverage ratios on its portfolio generally. To continue the point from Moody's, MPT's management, after complimenting these hospitals and their staff, go on to say in the earnings call, the geographic location of these hospitals are not necessarily the best in our portfolio, and yet they traded at a 7.4% economic capitalization rate. In support of this, it's important to remember that Australian facilities sold at a 5.7% cap rate. Now moving on to some sustaining macro and company specific factors. As the Fed increased interest rates, this has had the effect of decreasing the dollar value of their properties, as well as decreasing the value of the fixed interest bonds already issued. In combination with the creditworthiness degrading with the Steward situation, this has given MPT an opportunity to buy back discounted debt. To illustrate this point, we look at the bond pricing of the low interest rate bond maturing in 2026, paying a crazy low 0.993% annual interest rate, which in March of last year became its most discounted at approximately 65 cents on the dollar, while now trading at 80. This bond can become less discounted on the perception by the market that MPT is becoming more creditworthy, or on the anticipation of interest rate cuts, but despite any reasons why, this offers MPT an opportunity to retire these bonds early at a discount. This essentially completes the update and leaves us with what could happen next. There are 2 main catalysts which are obvious to me. The first is to do with the recent surprise approval of the Certificate of Need in Connecticut. This is a key step for the acquisition of 3 hospitals by Yale New Haven after a near 2-year process. To recap, this transaction was disclosed in October of 2022. If you've been following MPT, you may know that this approval process has been delayed so much that they specifically exclude these potential proceeds from their $2 billion liquidity target for the year. And secondly, with the recent report of UnitedHealth's Optum group looking to buy a multi-state asset belonging to Steward, which has been described as its crown jewel. Obviously, this will be a massive liquidity event for Steward and subsequently MPT, as well as probably becoming a national story at this point. Should it be completed in a timely manner as well as for an appropriate cash amount, this would be the best outcome. There clearly remains many catalysts, including many potential surprises we didn't see coming, and therefore much potential for disappointment. For example, there's potential for renegotiations of price after the near 2-year approval process in Connecticut, especially after the reported cyber attack, or regarding any antitrust concerns with Steward, since Optum already has a large market share in what they seek to acquire, especially since this will involve regulators across multiple states. If there's enough interest, I will look to release a video on what I think happened to MPW stock, which includes my own theories, albeit not conspiracy theories. And with that, I would like to thank you for watching. Comment below any thoughts.